Welcome back. And Avi here with some of the other stocks that are buzzing in trade this afternoon. Avi, what do you have on your list?
So let's have a look at some of the stocks that are buzzing in trade, starting off from GR Infra Projects that has received a GST show cause notice for FY21, which includes tax, interest and penalty worth 321 crore rupees. While the company is preparing its response, the stock seems to have reacted negatively and is down by about 1.5%. And GR Infra Projects, on receiving a GST show cause notice worth 320 crore rupees, is seeing some selling pressure. Up next is the Tata Power, for which Singapore court has dismissed Tata Power's challenge against arbitral awards in the Kelros capital dispute. The company did not find any breach of natural justice, and that is the reason Tata Power is seeing some selling pressure and is down about 3.5%. Up next is ICICI Prudential AMC, in which a block deal took place worth 3,121 crore rupees, in which a worth around 1% of 1 or 2% of stake sale exchange of shares took place, and that is the reason the stock is down about 4%. Up next is Rubicon, in which a block deal took place worth 2,200 crore rupees. The seller was General Atlantic of Singapore, and the buyer saw some big names like HDFC, ICICI, SBI, Axis, and TIMF Holdings. Our last pick would be Ratnavir Precision Engineering, in which they have submitted a letter of offer worth 330 crore rupees, and the right issue will come at 264 rupees per share, and they will receive 7 shares for every 40 shares held. The promoter holdings as of now is at 45.48%, and they will not participate in this right issue. So these were the stocks that were buzzing in trade, stocks like Ratnavir, Rubicon, ICICI, Tata Power, and GR Infra Projects.
Thanks, Avi, for that. We have now Arpit Beriwal of Motilal Oswal joining us. Arpit, hi. How do you look at some of the telecom stocks? Bharti under pressure after Singtel commentary that it may sell further stake to bring its stake at par with the promoters?
Very good afternoon to all. So if we see, looking at the overall telecom stock structure, so if we particularly talk about Bharti, so Bharti has been more or less sideways from the last couple of weeks. So if I look at the trading range from 1800 to 2000 is a broader range, and in last couple of days, you've seen some corrective move from again 2000 to 1880 levels. So looking from the bigger time frame setup, the stock is more of a consolidation in a range between 1850 to 1950 levels. However, clearly on the weekly and a monthly setup, upside seems to be capped. Along with that, if we see, interestingly, whereas we have seen Idea is relatively outperforming. So we have seen good momentum in Idea in last couple of days to weeks time frame. And after a corrective phase in last month, if you see July series, we have seen a very strong pullback and comeback in August series. So I think relatively placed between Idea and Bharti is relatively under pressure. Looking at the Idea structure, so definitely the base of the stock is shifting higher. So earlier hurdle zone was around 14 levels. Now that would start acting as a support levels. On the upside, we can see move towards 16.5 in a couple of days to weeks time frame.
Arpit, what's your take on some of the pharma stock, because that's one index which is up today. Pharma is up 0.5%, Nifty Healthcare is up 0.5%.
So definitely, if we see from the March bottom where we have seen very one-way vertical rally, so pharma index was the first index where we have seen a strong outperformance, and this was the first index that gave a classical pole and flag breakout on the monthly time frame, and since then we have seen good momentum across the pharma pack. So I think looking from a setup of positions perspective, pharma index, the strength is likely to continue, and we can see good further 5% upside move in the index. Looking from a stock perspective, we have a couple of ideas. First would be Laurus Lab. So if you look at the chart structure of Laurus Lab has been a spectacular run from last almost 3 to 4 months, but looking at the setup wise, there is no stopping, and looking at the setup wise on the weekly time frame, we have seen again another range breakout. So looking at the setup wise, definitely the stock can head towards 2100 positionally. So Laurus Lab be your first pick. Second would be Divi's Lab. So Divi's Lab also have given a similar pole and flag breakout structure above 7500 levels. Since then we have seen a very sharp momentum, but looking at the setup wise, as the positional setup stands to be still strong, so we can see 5-digit figure 10,500 plus levels. So Divi's Lab and Laurus Lab looks good for 8 to 10% upside move in next 15 days to 1 month time frame.
And what about some of the buzzers today? Bombay Burma is up 13.5%, NMDC is up nearly 8.5%.
So definitely, if we see, surprisingly, if we see over here, where the index has been stuck in a range with broader market participation really good. So all in all, with mid cap and the small cap, definitely very strong momentum is seen. And if we see from last couple of days, every day there's some other sector that is really playing out really well. So for example, today if we see Bombay Burma, particularly classical double bottom on the daily scale, good surge in volumes, surpassing its short-term moving averages. So definitely we can see good momentum towards 80, 1800 levels. Having said that, the bigger trend is still in pain. So whatever move we have to play is for a bounce back move towards 1700, 1750 levels in next few days to weeks time frame.
If you look at today, the buzzing stocks there, you'll see that Muthoot Finance, Manappuram, both of them are down over 4%. Any takes there?
Yeah, so definitely we see Muthoot Finance, the bigger structure. The stock was in pain on the monthly time frame since last couple of months. However, this month we've seen very strong recovery from 2800 levels and that move extended towards 3300 levels. Last few days there have been some corrective move, but to look at the structure on the monthly time frame, definitely the base building is being getting formed on the monthly time frame structure. And now the major support for Muthoot Finance would be around 2850, 2900 levels positionally. And look at the setup wise, definitely some gain can be seen. Some corrective move is there, but the bigger trend is still positive, and the stock can head towards 3200, 3400 portionally. Along with that, we look at the Manappuram Finance. Relatively, the stock is strong. Today, it has seen a corrective phase, but look at the monthly setup wise, multiple supports are seen around 332, 333 levels. So I think that level will be a good entry point. We can again enter near 332, 333 levels with major support around 350 for an upside move towards 375, 385 levels positionally.
Okay. There's also some more stocks which are buzzing in today's trade, especially if you look at the AMC pack, ICICI Pru AMC. Of course, there's a block deal that has happened, but HDFC AMC is also down today.
So if I see overall the capital market theme has been a broad base, and within that there are multiple brackets that are there, like AMCs, exchanges, and the overall wealth management companies. So definitely some other days there is some action in some stocks, particularly talk about AMC, HFC AMC. So stock is trading in a sideways broader range between 2450 to 2800 levels, and this has been the structure since almost last 3 to 4 months. And look at the setup wise, definitely some cool off is seen, but multiple supports are seen near 2500 levels. At the same time, 2750 is the major hurdle levels. So from a trading perspective, this is the broader trading band where one can add near 25, 25, 20 levels with a major support around 2400 levels for an upside move towards 2650, 2800 levels. One more thing that I would like to add, as the market has been a broader trading band, so most of the stocks are trading within that particular band of 8 to 10%. So we have to play that band accordingly to make the maximum alpha.
Arpit, I'm going to pause this conversation for a minute. Let's cut across. There's the Ministry of External Affairs briefing us on the Nepal floods. Let's listen in.
We are making available their names on our X handle so you can get the details. Our embassy, our ambassador has spoken to people in the group and have assured all possible help. They are coming to Kathmandu, hopefully, and then arrangements will be made for their travel back home as soon as possible. Let me also give you an update on the Chinese side. We have received information that a number of Indian nationals who had gone on the Kailash Mansarovar Yatra are currently stranded on the Chinese side. Our embassy in Beijing is making all efforts for their safe evacuation. There are approximately 200 Indian nationals there who have sought our assistance for evacuation. Of them, 95 are in Darchen and currently proceeding to Hilsa to cross over into Nepal. 4 are in Geelong city, 30 in Zutulpuk, and they are en route to the town of Saga, and 60, 70 others who are also heading towards Saga. Our mission is in touch with local authorities, and they are doing their best for their rescue and evacuation. Let me also tell you that there may be some people who are missing there, and we are trying our best to locate them through the local authorities. Separately, we have received information about persons of Indian origin, including a large group from Isha Foundation, comprising people of Indian origin, some foreign nationals, and maybe some Indian national there who remain uncontactable. As I said in the beginning of my remarks, the information that we are providing you is based on the preliminary information that has been shared with us. We are in a dynamic situation, and we will have more updates on the figures that I just spoke about. On the relief work, the assistance that we have provided, as you would have seen through the releases that have been put out by us, two aircraft with humanitarian assistance have been sent to Kathmandu. A C-130J aircraft took off yesterday at around 8:30 p.m. carrying 10 tons of relief material, including temporary shelters, blankets, hygiene kits, solar lamps, medicines, etc. And then this morning, a C-17 aircraft departed with 37.5 tons of supplies, comprising 28.5 tons of relief items such as tents, blankets, hygiene kits, solar lamps, dewatering pumps, kitchen sets, gen sets, etc. 8 tons of medicine and 1 ton of food items. In total, across the two departures by air, India has sent 47.5 tons of emergency relief supplies aimed at supporting Nepal's ongoing rescue and relief operations.
Welcome back, and we're joined by Piyush Pandey, Senior VP IT Lead Analyst at Centrum, joining us this afternoon. Piyush, great having you. This is Harsh here. This is with regard to, of course, Singtel, and in its analyst day suggesting that they will trim stake in Bharti Airtel, bring it down to the level at which the Bharti Group holds Airtel, which is roughly 23.5% odd. Piyush, what does this imply? Does this imply there'll be a, 50,000 crore stake sale, which will happen over the course of, obviously, then over the medium term?
See, I would say that currently Singtel holds around 26.8% stake, and it has been part of long-term strategy of Singtel to optimize its stake and bring it closer to equal to Mittal family stake. See, we can expect close to around, say, 2% stake sale over, say, over medium term, and that will be, say, closer to around, say, 20,000 crores. But it will happen over a period of time, and aim is primarily to, like, say, focus on growth areas to reduce debt on the part of Singtel and maybe optimize its current portfolio holdings.
Hi, last November, December, Singtel sold a part stake for nearly 10,000 odd crores. Do you expect this part stake to come in this calendar year itself?
Yeah, so we can expect 1% stake sale maybe in the next 3 to 6 months, and then maybe another 1% stake over the next, say 12 to 24 months.
And do you see the existing promoters participating to shore up their stake?
See, I do see a chance that Mittal family might increase their stake from current 20.2% to roughly closer to 25%. Even in the, say, March 26 call, the promoter had expressed interest that they want to see Telecom, Bharti Telecom, which is holding at around 50% over the next 10 years. So there's a high chance that Mittal family would like to increase their stake.
Sorry, so I'm trying to get clarity here. So Singtel has said that they want to trim their stake to the extent to which the Bharti family holds stake in Airtel, right? So does that mean that they will trim it by just 1.5% and keep it at 25 and allow the Mittal family to increase their stake to 25? Is that how you read into this? Or do you read into it as Singtel will bring it down to 23.5 and the Mittal family will increase it to 25? How should one read this?
So I see a case that Singtel would like to bring its stake to 25%, and Mittal family would prefer to bring its stake from 23.2% to 25%. Where both the promoter would have roughly closer to 25% stake in the Bharti Airtel.
Straight knockoff, right, Piyush? That means that whatever Singtel will be selling, the Mittal family will be buying, and both of them will sit with a 25% stake.
Yeah, that is one way to look at it. But it might be that, like, say, this Mittal family might prefer to increase its stake over a period of time. Like, so it might not happen during the same time horizon.
And last off, just trying to understand the promoters of Airtel in their commentary have suggested that they want to maintain 50% holding, right, in Airtel. Yes. This will dilute that, right, Piyush? There's a risk that it falls below 50. Temporarily.
See, below 50 for a short period of time, that is something can happen. But I would say over medium to long term, they would definitely prefer to have more than 50% in stake.
Off, I'm just trying to understand. Also, the promoters have said that they'd like to increase stake through buybacks. So they will not opt for the buyback, but they will have Bharti Airtel do buybacks, which will mean that their stake goes up, right? Would you say that would be one of the methods in which they'll increase stake, or is that the right way to judge this? And what happens there now?
Yeah, so we do expect that the free cash flow generation would increase for Bharti Airtel over the next in the coming quarters, like, and of course they would like to increase the dividend and participate in buybacks. But since promoter would not like to participate in such buybacks, and therefore their effective stake would increase.
Okay, Piyush, thank you so much for coming in and speaking to us. We'll let you go. All right, and viewers, dive into a break. Come back with more. Stay with us. Welcome back. And sugar prices, they're turning into a key cost pressure for FMCG companies, with retail prices up nearly 40% since January. Elevated palm oil costs are adding to the pressure, but that came through in Q1 as well. And while companies could resort to grammage cuts to protect margins, we'll see as to how this plays out. But Snehi here with more details. Snehi, top companies impacted?
Well, absolutely. Sugar has turned out to be bitter for FMCG companies, and this is a note coming in from Goldman Sachs, wherein they're saying that the retail prices of Indian sugar has reached as high as 58 rupees per kg as of August 2026, and sugar prices are up 40% since January, and this is one of the steepest rallies that we've seen in such a short time, over a decade. Key drivers behind this surge, what is leading to this spike in sugar prices? This is on the back of some supply pressures that are being aggravated by El Nino related rainfall deficits, and they have affected sugarcane yields, and a tight carryover stock with an estimated 4.1 metric tons only of sugar by September 2026. This could crunch the sugar supply and keep prices elevated. So on the pricing front, here's what's happening. On one hand, you've got government intervention that is allowing 1 million tons of duty-free imports of sugar to India, and that has slightly cooled off sugar from its peak pricing. On the flip side, the upcoming festive demand ahead of the October-November crushing season could keep a sugar price elevated. So it's just a wait and watch right now as to what happens to sugar pricing. And not only sugar, it's in fact a double whammy coming in for FMCG companies, because along with sugar, we've also seen a spike in palm oil costs. And on the back of that, shrinkflation or grammage reduction will require time to execute. And this could be something that could pressurize near-term or especially quarter-2 margins for some of the FMCG staples. That's what Goldman Sachs believes. Now let's understand the company-wise exposure to sugar for Britannia. Highest reliance to sugar, 15 to 16% of its raw material is made up by sugar, 20% raw material made up of palm oil, which means the overall impact could be very high for Britannia. Nestle India, roughly 6 to 7% raw material basket made up of sugar and moderate exposure to palm oil, keeping its overall impact moderate. And for Varun Beverages, while they have a 10% sugar exposure, they have zero exposure to palm oil, because remember, they make aerated drinks, and on the back of that, the impact could be moderate to low for Varun Beverages earnings. Just talking about all of these companies in little more detail, Britannia has 65 to 70% revenue reliance on low unit price packs, and that is where we could see shrinkflation getting hit the worst. Forward contracts and reduced ad spends, however, if this is something they are able to execute, may buffer margins in the second quarter. For Nestle, higher pricing power provides a cushion to the company, but steep valuation at 58 times the price to earnings where the stock is trading right now leaves little margin for error. And lastly, for Varun Beverages, it's best positioned in terms of how much sugar makes up of its portfolio, 10% of raw material costs, and it's offset by a portfolio shift towards low and no sugar beverages, and its zero palm oil exposure also helps Varun Beverages. So here we could see a very little to no impact in terms of Q2 earnings, but yes, watch out for Britannia as well as Nestle, and that is the kind of impact that sugar and elevated palm oil pricing could have on Q2 earnings of some of these FMCG staples.
Thanks, Sneh, for that. Joining us now is Devang Mehta from Spark Capital. But Devang, before I come to you, let me take the final question from Arpit. Arpit, what do you have to say on some of the FMCG counters, especially Britannia or for that one Nestle or Dabur?
If you see overall, the FMCG index has been in sideways with the weakness. If you see the bigger trend, there was some pullback move in selected counters like some Marico. But apart from that, if I look at the bigger structure, the bigger trend of the stocks are still in weekly in a negative bias. Whether the chart structure of Britannia, HUL, ITC, Nestle was some outperformance was seen, but in last couple of weeks, if we see the stock has corrected. So having said that, very selective action is seen. Within that, if you still want to choose someone that looks relatively better, is still Nestle. So stock was trading a life-high territory. Some cool off is seen, but I think multiple supports are there near around 1400 levels. So that could be one level that could be one watch out for to add Nestle with that positional perspective of 1600 plus levels. Apart from that, other counters are still in weakness. It's better to avoid and go with the strongest sectors and stocks going forward.
Devang, your take on some of the FMCG pack, especially Britannia and Nestle, given the fact that sugar and oil prices are rising?
Thanks, Sajid, for having me on the show. I think, yes, typically FMCG is one space which we have avoided since a long time. And I know there has been a little bit of improvement in the fortunes of the companies in terms of their earnings last quarter. Some of these companies, not all, of course. And the commentaries have started to improve because of rural consumption improving. But I still feel a lot of such companies are traditional old world type of businesses, which of course can show you volume growth of 2, 3, 4, 5% in terms of their volumes. But my sense is that some of these companies also have pricing power to pass on the high palm oil prices or even the sugar prices. But to a certain extent, right, they can reduce the grammage. But I think because of the intense competition that every category now brings in, it will be sort of difficult to either maintain margins or scale up in terms of volumes. So I think what we have been recommending over the last couple of years, and I keep that stance still, is that more so we are focused on discretionary consumption, the luxury end of the consumption, the auto side or the travel luxury type of tourism. That is more our focus rather than being in the usual FMCG companies, which probably from here on can compound at 10-12%. But the discretionary consumption universe probably has more legs to make that 15, 18, 20% type of returns over the next 3-5 year period.
Yes, hold on there. Nepal's devastating floods could have a limited direct earnings impact on major Indian FMCG companies, despite their significant operating presence in the country. Dabur, ITC, Varun Beverages, and HUL have subsidiaries in Nepal, but their contribution to consolidated profits remain relatively small. Sneh joins us with the analysis.
Well, yes. So once again, FMCG is in focus because remember, along with wind and power generation, FMCG is a sector that is exposed to Nepal and the unfortunate events that are taking place over there on ground. Let's try and understand the financial impact of some of these on the FMCG companies. First, let's talk about Dabur Nepal. They have a subsidiary called Dabur Nepal Private Limited. That's their exposure to Nepal, with a 97.5% stake held in that company via the subsidiary. In terms of how much this subsidiary contributed to the FY26 PAT at a console level, the contribution was 4.3% from the subsidiary at an amount of 80 crore rupees. That's the kind of PAT contribution we've seen from the Nepal subsidiary for Dabur, makes up just 4.3%. Now, in terms of Dabur, they have presence of local manufacturing. They sell products across food, healthcare, personal care, and other FMCG categories in Nepal. Shifting focus to the next company, ITC has an exposure in Nepal via its subsidiary Surya Nepal Private Limited, wherein ITC holds a 50% 59% stake, and that made up 3% of the FY26 consolidated PAT at an amount of 478.5 crore rupees. For ITC, this subsidiary manufactures cigarettes, incense, matches, and makes and exports ready-made garments, including brands like John Players overseas. Now let's also talk about Varun Beverages. They have exposure in Nepal via their subsidiary Varun Beverages Nepal Private Limited. It's a wholly owned subsidiary. Varun Beverages holds 100% stake in this subsidiary, and it made up 3.7% of Varun Beverages 2025 consolidated PAT to an extent of the amount of 155.5 crore rupees. For Varun Beverages, this wholly owned subsidiary manufactures and sells PepsiCo beverages, including Pepsi, Mountain Dew, Mirinda, and 7-Up. And Varun Beverages also has 2 manufacturing plants in Nepal, Pepsi Cola in Kathmandu, and 1 in Navalparasi. Lastly, let's also talk about HUL. They have exposure to Nepal via their subsidiary Unilever Nepal Limited, wherein they hold 80% stake. This subsidiary made up just 0.6% of HUL's FY26 consolidated revenue, so very minimal impact, and the contribution was only 83 crores to the total bottom line. When it comes to HUL, this subsidiary manufactures, markets and distributes major personal care and home care products, including Sunsilk, Lifebuoy, Lux, Close-Up, Wheel, Dove and Pond's. So while these were some of the companies that had major, slightly more exposure to Nepal, some other companies in focus are Bikaji International, wherein just yesterday it has announced a 50-50 joint venture with CG Bikaji Private Limited with Nepal's prominent Chaudhary Group. Remember, this is the manufacturer of the YY noodles, and they are going to be manufacturing, trading and marketing snacks, namkeens, bhujia, papad and packet sweets within Nepal. And lastly, Imami, Marico, Britannia, they also sell their products in Nepal via localized distribution routes, but have very nominal exposure. So the exposure in terms of the earnings or the financial impact for FMCG companies on the back of all the unfortunate events unfolding in Nepal could be minimal at best.
All right, thank you so much for that, Snehi, and you've got Dabur, who have suggested and disclosed that there isn't a material impact, or there is no impact on their subsidiary in Nepal. Manufacturing operations continue uninterrupted, fully operational. All their facilities. Operations of only 3 distributors of the subsidiary whose offices are located in flood-affected areas are likely to be impacted to some extent. Estimated overall impact is negligible, is what the company has said in a statement. So, despite the 1.4% knock on the stock, you're seeing that clarification come in. And despite that, no recovery, at least at this point in time. Let's go across. We've got Kunal, of course, with us. Kunal, out of the FMCG names, anything that you would pick at this point of time? Anything looking attractive on charts?
Nothing as such, frankly, Harsh, because most of these stocks are still struggling. Whether you look at HUL, you look at the recent corrections in the likes of Marico, Dabur, I think most of these stocks are going through their rough patch of correction. It's just that there is lack of trading interest into the sector. There is lack of volumes, participation, more like a commitment from short-term traders into this pocket. And that's why I think it's better to just about let the stocks consolidate, wait for a sign or a signal where the stocks sort of show signs of bottoming out, whether it's volumes making a comeback, whether it's the bullish candles for maybe a consecutive couple of days, 2-3 days on a trot. That could be a signal of a turnaround, which has not happened for the FMCG charts as of now. And that's why I would believe that it's better that one avoids the space as of now, purely on the basis of charts.
Okay. All right. I just want to quickly mark out Skipper as well. That stock is perked up 2% odd. Anything from the power ancillary space, Devang, that you're liking?
Actually been, I think, big propagators of power automation, HVDC type of businesses, engineering, power ancillaries. I can just give some examples, not recommending the stocks, not allowed to do that. We hold it in our client portfolios, something like a Hitachi Energy, which of course has become huge for us, maybe from some clients around say 25-30x to more than 15-16x in some portfolios as well. And of course, over the last 5-6 years, this has been the story. Something like a GE Vernova. I think all these companies potentially have a sort of order booking in terms of 30 to 40,000 crore. But most of these companies have opportunities right from 5-6 lakh crore to 10-12 lakh crore of opportunities. Now, I think the entire power ancillary space, the entire energy efficiency space, semiconductor allied, data centers, this all are interrelated in a way, and there are a lot of proxy plays. Most of this are small and mid-cap companies, but I think we were really positively surprised by a lot of such companies' numbers. And if numbers were not up to the mark, the commentaries were very bullish for all of these companies. So my sense that the capex side of the universe, the power side of the universe, the power automation space should continue to do well.
Okay. The other one, this is a trade which has frankly played out well for you, Kunal. Kotak Mahindra Bank, that stock now sitting roughly 2% higher versus yesterday's close. But you said this is a buy on dips candidate, and the first dip that we saw this morning, if you are a buyer there, then you're up by at least 2 to 2.5% on the stock price. What next with regard to this one, Kunal, Kotak?
Yeah, I think so. The breakout and the trend. So it's a matter of sustenance of trend. So whenever trends sustain for the stock price, even if there is minor kind of a pullback or corrections, that tells you that there is buying interest into the stock. Now I'll compare it in this manner that in the volumes which you're seeing for Kotak Bank yesterday and the volumes today which you're seeing on the stock, both on the future side as well as on the spot price, is far bigger, far greater as compared to yesterday. So when you see higher volumes on cash, higher volumes on F&O, that generally is an indication that there is a renewed buying interest into the stock price. And in such kind of a scenario, it's always better to go with the trend and expect that the trend will continue for Kotak Bank. So I'll maintain that bullish stance, which we highlighted, I think, last week or for Kotak Bank. The stance still remains bullish, but it's just that, with incremental highs the stock makes, a 5%, a 10% jump, it becomes difficult to suggest a buy at every uptick. And that's why the strategy is that you just wait for that marginal correction, a marginal drop into the stock price, then look to add the stock.
Okay. All right. We'll slip in a very short break, come back, continue chatting with both Devang as well as Kunal. No real moves in the cash segment as well. We'll continue to track that, whether there's any move to the reference rate at close at 315. Not much of a move that we're seeing, at least at this point in time. But we'll wait and watch out for that. On the other side, stay with us. Welcome back. Now, textiles as a pack is something which has made a few good, smart moves. Devang, how do you look at textiles and the entire Indian manufacturing space? Is textiles currently, in terms of risk reward, a good way to play that?
I think yes, we so far have not looked at this side of it, but honestly, it's work in progress. We are looking at the sector with a positive light, and I think some of the FTAs that India has signed, the UK FTA, and all also help in terms of India's strengths in garnering more exports, and also on the domestic side of the story, the premium consumption that a lot of these companies enjoy. Right from the retail outlets to a lot of companies which are in the high-end fabric making to high-end sort of ready-made type of garments as well. Most of these companies are still not trading at some hyper valuation. So my sense that yes, this can probably re-rate. There are certain, some of these companies also rate themselves on some of the parts basis. There are land banks attached to some of this as well. I think yes, it has to be looked with a lens. But the theme looks interesting from here on after a long time.
The Nifty has fallen 0.5% thereabouts, post or around 1/3% now, but 0.5% at the bottom. You can see that choppiness visible on the Nifty 50 index. And we're now touching 24K. Kunal, what's playing out? This volatility now again on a day like this?
Yeah, Harsh. So I think it's just that lack of support from large cap names, the dismal overall market breadth on a relative basis, the very, very, I would say, segregated and fragmented lack of follow through for the sectors and stocks. I think that's making the trading and as well as the market trend sustaining a lot more difficult. And I think that's one of the major reasons why you're not being able to lift off into any kind of a recovery or uptrend for the indices. Yesterday was, as I said, was a good day for few of the indices, but today there is just immediately no follow through for stocks and sectors. Even on the options built up, as I was pointing out earlier, it's not as if that there's been a huge amount of a call writing on a quantum basis as compared to put writers in the last couple of days. So I think that's also one of the reasons why I would believe that it's just lack of interest and participation which is causing this kind of a grind, I would say, for the index.
Let's look at some of the stocks, right? What's happening? Bharti, it's fallen nearly 1% in cash session, followed by Grasim, which is down 0.7%. Reliance is dragging it down 0.6%, which is there. Asian Paints is something which is active at is down nearly 0.75% there. So there is a selling pressure which is coming in the last the 5-10 minutes, which is there, especially because today is a sensex expiry, so there is an activity which is happening underway. Among the gainers, you have Coal India, NTPC, you have Ultratech, where we have seen some buying coming in, but it's the heavyweights which is dragging in. Bharti, Grasim, M&M, Reliance. Some of them, look at it, how it's is changing. M&M is also, it's just fallen off in the cash session at this point. So there is a lot of update, which is the Nifty is down nearly 0.5% at this point, roughly at below the 24,100 mark, and that pressure is coming up now, especially in the last a minute or so before the cash session ends.
Okay, so you're seeing pressure on the Nifty, the Sensex, though broadly okay. Plenty of choppiness, in fact, on the Nifty that is visible. I wonder what you make of Airtel, Kunal, at this point of time, Bharti Airtel. Again, if you pull up the intraday chart, you'll see the kind of choppiness. The stock is up nearly 1% from the day's lows, but talk to us. How do you look at this one?
In fact, Harsh, if you remember, Bharti Airtel was one of the sell calls which I had initiated in the morning. My expectation was that the stock has broken below a crucial support around the 1930, 1920 kind of a zone. And that, I believe, could probably trickle into some bit of weakness into the stock in the near term. The bigger worry for Bharti Airtel, when I look at the charts, is that compared to pair strategies across other related sectors, or other stocks in the related sectors like maybe Reliance or Vodafone Idea, etc. Bharti Airtel now stands to be one of the stock which is slightly bit more overbought, relative speaking. So that, I think, was also could act a little bit heaviness for the stock price in the near term. So coupled with a break below 1930 mark, as well as this skew in terms of the relative strength pair, I would believe Bharti Airtel could underperform for the near term. So my initial target, which I think I pegged off, was around 1870, 1880 mark for Bharti Airtel. But now I would believe that maybe if the stock is unable to recover about the 1900 mark, we may see another 30 to 50 point drop.
Kunal, we have seen a sudden unwind of call positions happening at this point in time, and that's also one of the reasons why we are seeing the volatility in the market, especially on the NSE. If you look at it, how calls have suddenly been unwound. That's something very interesting which is coming in there. But the Nifty closing below the 24,100 mark, 2490 is where I think we will be settling in today up in cash session, and it's F&O expiry for the Sensex monthly. So I think that's the kind of settlement price, which also Sensex is down nearly 0.7% in today's trade, 539 down. 76,933 is where the Sensex is trying to end in today's trade there.
Okay, just I'm going to quickly try and pull out some stocks which are buzzing, at least at this hour, and try and take a couple of calls from Kunal. Devang, I'd request you to be patient with us, because we need to first wind down for the 3:30 close, which is the cash market close. Kunal, today some cool-off seen in Manappuram, in Capri, in Muthoot, that entire set of stocks which has been doing very well. You're seeing pressure now, you're seeing an unwind. What do you do at this juncture if you're a trader?
Yeah, I think this could be a concern now, because Harsh, as I was pointing out earlier, that there's lack of follow-through approved. So 4 good days for Manappuram Finance. The stock jumped from 345 to almost 375 yesterday or day before. Almost like a 10% up move for the stock price. And the stock, or that entire 10 odd percent up move for the stock price got undone in just the last, I think, 1.5, 2 days for the stock price. From 375 yesterday as a high, the stock is back again to 345 mark. This is a big concern for the stock price. Doesn't look attractive now because we are trading at a point where you need to build up your trading strategies for just a matter of maybe 1 or 2 days, because you know that at the end of the second or the third day the markets would lose sheen, and then there could be a possibility that the stocks may go into a correction. So Manappuram Finance, Muthoot Finance don't look attractive on the charts anymore because the fact that the stocks have rescaled back to their starting point of the last 4 5 days of rally.
Okay. And Devang, what's your view on some of the gold financiers?
Like the NBFCs, honestly, but have never sort of got into gold finances. So a lot of this consumer NBFCs, a lot of this quasi-financial companies, which I talk about always, the wealth management outfits, some of the broking outfits, intermediaries, financial intermediaries, exchanges. I think all these companies have also gone through a fair bit of correction over the last 10-15 days. Looks very interesting. Of course, they bring in a lot of cyclicality into the portfolio, but somebody has a 2-3 year horizon. I think this type of NBFCs and financials is where I'll place my bets rather than getting into the gold finances.
Okay. I'll also quickly take your view, Kunal, with regard to a couple of stocks. BHEL, for example, down up 4.5% today, I beg your pardon. And then you also have from within the power basket, CG Power, which is also up nearly 4%. Adani Power was up 3.8%. In any of these areas where there's chance of a fresh trade?
Yeah, I think Adani Power is something which starts to look attractive. The stock which was almost at 235 to 40, if I'm not wrong, a month back, had fallen down to 200, 205 was the low for Adani Power. And now the stock is trying to turn around. This comes after almost like 6-7 weeks of the prices going into a correction for Adani Power. So this starts to look a little bit more better, attractive. Even BHEL, I think, would be a very interesting trade over here. Now, the only catch over here for BHEL and Adani Power is that they are high beta stocks. And we know how the markets are treating these high beta names, because if you're caught at the wrong end, if you buy at the wrong end, then the market first initially goes into a more of a painful correction for a few days, and then the stocks come back into recovery mode. So the position sizing, the entry point has to be a little bit more staggered. But I believe, yes, BHEL, Adani Power, both of them, they look attractive given the current setup, as well as the last 5-6 weeks of the price correction and the listless activity which these stocks had exhibited earlier.
Devang, what's your take on some of the PSU stocks, PSU banking stocks especially? It's down nearly 1% today, but we've been seeing some correction coming into PSU banking.
I think PSU banks look interesting at this point because most of the NPAs we saw have been sort of cleaned up. I think they are again ready to go with credit growth rising, with capex on the anvil, even private capex going to come back with a big sort of a bang. And also, I think the consumption, generally the discretionary consumption improving. I think most of these companies could do well. Yes, on the valuation front, if you ask me today, vis-a-vis private banks, which had a very normal type of a run rather than PSU banks, private also look attractive. But a combination of both private, a little bit of one or two private and PSUs should do well. But as I said in the earlier question, our bet is more on non-banks, NBFCs, other wealth management companies. I think these are part of our portfolios rather than the usual run-of-the-mill PSU or private banks.
And in the metal pack, aluminium stocks, Hindalco, Vedanta Aluminium?
I think what again we have done is, and you would probably be it's a little different answer, but rather than metal, we try and play a proxy, which is something into mining consumable space or something into the refractory space, or something which helps to sort of process the help in the process of how the metal gets sort of dug out from the ground. So I think these are certain type of companies. Just an example being Tega Industries, which is into mining consumables, copper and gold mining consumable. So I think as deep you dig, I think the number of consumables, the amount of consumables required will increase more and more. So I think this proxy plays would help you more rather than playing the usual metal cycle.
And uh, in the consumer space, especially quick commerce and the food delivery apps, Eternal and Swiggy.
I think again we here over here we are very clear that we want to play the lifestyle expansion or more the luxury segment. So we are focused here on typical autos, the two wheelers and then the luxury four wheeler space. Maybe this is a better suited for what we want to deliver. I think also as I talk about the luxury and the Uber type of consumption, there also I think clearly we are more focused on hotels or even to a certain extent looking at certain airline companies. Maybe if the crude sort of settles down, I think some of these are opportunities in adversities, according to me. So on the consumption side, we are typically more on the discretionary stuff.
And Adani stocks, Adani Enterprise and Adani Ports, if you look
I
at them.
don't cover it right now, Sajid.
Kunal, your take on Adani Enterprises? The stock is up over 1% today.
Yes, it starts to look attractive, Sajid. Many of these Adani group of names had gotten a bit quiet in terms of the trading activity. Adani Enterprise specifically, I think the stock had, you look at the last, I think 2 months or 3 months, the month of June start is where the stock had entered into this consolidation. It had entered the 3,000 plus move for Adani Enterprise. And then in the subsequent next 2 months or 3 months ending so far, the stock made a high which is around 3,200, 300. So a trading band of 200, 220 points approximately for Adani Enterprise. And now the stock is trying to inch back again towards a breakout. So I'll just maybe suggest maybe a wait for a breakout about this 3,225 plus mark for Adani Enterprise. Only about that is where I would suggest a buy, because the grind is that the markets are into this patch of consolidation, and many a times when the stocks don't provide that breakout, that consolidation may extend for some bit of more time.
Devang, thank you for joining us today. We are towards the end of the session, and if you look at what's happening in F&O market, there's a hectic activity happening in the call and put, especially for Nifty, where the call unwind has happened in the last 15 minutes of trade, which is the Nifty spot down nearly 0.5%, open interest build up of nearly 5.84%. So the kind of shorts that's getting built on Nifty as Nifty ends below 24,100 level. Nifty Bank is down 0.5%, sitting at a premium of nearly 345 as we speak. The open interest up 1.32, primarily on the back of long unwinds which we have seen, and some short build up in HDFC Bank. There's a short covering that's happening in Axis and ICICI Bank there, and IndusInd, while overall in the PSU pack there's a long unwind which we are seeing there today. Call and put writing 24,200 and 24,300 are very active this time. Look at the distribution chart. You will see that the volatility which we have seen. We have a good amount of put writing happening at 24,100, but the volatility that happened, especially last 10 minutes, where the stocks fell, especially some of the stocks like Bharti and M&M, that took the index down. Future gainers include 3.7% jump in BHEL, Zydus is up 3.4%, Amber is up over 3%. And then you have in the losers, you have Manappuram Finance, Muthoot and Tata Power seeing some short build up there. Open interest gainers, again Tata Power is one of the stocks where we saw some shorts getting added, but aside of that, Sagility, Bank of Maharashtra, and there's something wrong with the open interest numbers there, but Sagility Bank, Tata Power was one of the stocks where we have seen some activity. Look at what's happening in the individual stock options. You had CG Power, which was very active today in today's trade. Nearly 8 lakh contracts getting added there. The premium up nearly 12.2. And the stock at 900. The other one was Tata Power after losing that arbitration in Singapore. There's a pressure which is there, so shorts getting built, the stock down, and open interest up nearly 18 lakh contracts. The premium up 4.55. In today's trade. So hectic activity seen in Tata Power's 350 September put. The futures trading at 352.6. Kunal, your final take?
When the markets continue to show signs of sluggishness, Sajid, but I would be now start to be a little bit wary on the indices, because we are not just threatening to go back sub the 24,000 mark, but the fact that the indices are unable to surpass their key moving averages. Today, in fact, we managed to break the 50 DMA on the Nifty, and we've also broken below the 200-day moving average on the Bank Nifty. So this persistence of the index to try and show signs of weakness and not surpass those averages, I think constantly would probably lead to some pressure on the index. So we'll wait for a break below the 25,000 mark, but the optimism which was built into the indices maybe a few days back or a couple of weeks back, that optimism is definitely fading out.
Thanks, Kunal, for the take and joining us today. We step into a small break, but after the break, we bring you a special segment on commodities, Commodity Central with Ashish Shah.